And welcome into Market Talk. Thank you so much for joining us here on this Christmas Eve. Merry Christmas and happy holidays to you and yours. I'm your host, Jesse Allen. Again, thanks for making us part of your day today here. A busy holiday season in front of us. Find us online, markettalkag.com. That's our home on the web. Markettalkag.com is where you can find us. All of our streaming sources are there. All of our social media links, latest news of agriculture, and much more. You can find it markettalkag.com. Well, very happy to have joining us here today, making some time for us in his busy holiday schedule, no doubt. Our good friend David Widmar with Agricultural Economic Insights, AEI.ag, to have a discussion, a wide ranging discussion about the markets and the ag economy. So let's bring David in here. And David, thanks so much for joining us, my friend. Merry Christmas and happy holidays to you. How are you?
Thanks, Jesse. Happy holidays. Merry Christmas to you. It's hard to believe 2022 is almost here. It seems like we are just getting ready to talk about 2020, right? It's been this big blur over the last several weeks. So, yeah, it's been, or weeks and months. So, it's always great to chat with you and happy to talk about the ending of the year here. And let's get started for 2022.
Yeah, a lot of things to talk about, and I echo your sentiments. Really crazy, hard to believe we are at the end of 2021 and turning the calendar over to next year. And there's a lot of things, a lot of issues surrounding agriculture and the markets and everything that are really top of mind as we move into 2022. And I know you've been busy on the speaking circuit and talking to a lot of producers about different topics that we're going to talk about here today. I think first, top of mind is the fertilizer issue. And that seems to be the big highlight in social media, in the media itself. A lot of folks are talking about a lot of worries about fertilizer prices and how that's affecting our economy, our ag economy in general. What are you hearing as far as fertilizer prices? What are you hearing from our farmers and ranchers, and just what's the worry out there about this issue, David?
Well, the first thing I want to mention, Jesse, to kick this off is anytime we see a big uncertainty, like what are fertilizer prices going to do, and there is a non-stop constant stream, a torrent of just noise about the topic, it is a recipe for chaos and decision making. And I feel like there is almost too much information, too much just raw data flying around in this fertilizer space, and a lot of it isn't helpful for producers trying to make a decision. It's just a lot of noise, and it's cluttering up our bandwidth for pulling out the key pieces of information. So I just want to kick this off by saying it's hard to sort through and sift through all the noise out there. There's a lot of noise around fertilizer. So I think there are a few key pieces to keep in mind. One, why are fertilizer prices high? Fertilizer prices are high primarily because corn prices are high. And I see a lot of commentary about, oh, corn prices are up because of fertilizer. No, the economics don't flow that way. Corn prices impact fertilizer prices. Fertilizer prices don't impact corn prices. And that's because corn producers are commodity takers. They can't push those costs through. And so we got to be careful with those narratives. The second piece here is we have higher energy costs than we had a year ago or even 3 or 4 years ago. And I think that brings us to our third piece. The sticker shock is from 10-year lows. Fertilizer prices last fall were 10-year lows, and now we're at career highs. But that whiplash really adds to how painful it feels. Now, I think the other piece here are the supply chain issues, and so I think we were going to have high fertilizer prices regardless of the supply chain issues. But when you have high corn prices, higher energy prices, and then the supply chain, it starts to pile up, and this is why we have this really aggressive um, fertilizer price situation. Everyone's sort of at the edge of their seats trying to see how all this plays together, and any sort of supply chain hiccup could cause a lot of implications. So, what we're doing is we're encouraging producers to really roll up their sleeves and do their due diligence here. And the first thing is recognizing that fertilizer prices have changed a lot in just the last 3 months. We were looking at a fertilizer blend typical of the Midwest. It's going to cost you about $160 an acre in September, which, by the way, was the high we saw in were the prices we saw back in 2011, 12, and 13, those previous highs. Now it's going to cost you $80 an acre more, close to $240 an acre. So not only is it high compared to a year ago, it's changing rapidly in the last 3 months. And I think the next 3 months, it could change a lot as well. The other thing producers are asking is how defensive should I play? How much defense should I play? How aggressive should I be in my defense? And I want to remind people, if we're going to play an aggressive form of defense, we're basically betting on fertilizer prices being lower next year or the farm economy being better in the future. And I'm not saying don't play defense, but don't play such aggressive defense that we don't have options in the future. Don't box ourselves out of a good option in the future, because we saw fertilizer being a real burden on the budgets, not when they were at a high per acre, uh, dollars per acre point, which was 2011, 12, and 13. It was in 2015 when commodity prices fell a lot, but fertilizer prices only fell a little bit. That's when it was the biggest budget impact on our operations. So keep in mind the high dollar per acre. Thankfully, we have $5+ corn going into 2022. I'm more concerned about what happens when corn prices come down a little bit or maybe a lot, and fertilizer prices remain stubbornly high.
Well, and there's a lot of fingers being pointed in the fertilizer space as well, and I think this goes to the all the clutter in our bandwidth out there trying to pick out the nuggets. I mean, people are pointing fingers at Mosaic right now. Senator Grassley's calling for a Department of Justice investigation. The NCGA and other groups are saying they want tariffs removed. So there's just, like you said, there is a lot of things out there that's competing for our attention, and we're not necessarily getting down to the raw data that's out there, David.
And all these are oversimplifications of reality. And those tend to get us in trouble with our thinking. And so I think all of those things are important. They're contributing to this problem, but a DOJ investigation isn't going to fix the combination of $5 corn and $80 barrel crude. That is a fundamental part of this. The other thing, thinking about high energy prices, from the work we've seen and the work we look at, energy prices have about a 6-month lag in fertilizer prices. And so if you're going to model this, the energy price dip we've seen is going to take several months to work its way into the system. And so we're kind of watching natural gas prices on a daily basis when in reality, it's more of a 6-month impact on where fertilizer prices might be. So producers need to really step back, know what their costs of production are, know what their fertilizer prices are, and make decisions that they can control. Those sort of the Venn diagrams, right? What's important to me and what can I control? And you focus on where those two circles interact. And otherwise, a lot of it's just noise, and it doesn't necessarily impact the day-to-day decisions that we're going to have to make on the farm as a producer.
Well, David, you talk about all these things and talk about managing risk and looking at our bottom lines. And I know you have a lot of tools on the AEI website and on the premium side to help farmers with that, and a lot of great, lot of great stuff there that you guys, a lot of great tools you utilize. Let's talk about 2022 and that acreage battle. And I know this is something that you guys have a lot of research on and a lot of people commenting on. And obviously, cost of inputs, fertilizers, etc, that's going to play into decisions for 2022. What are you hearing with the latest in regards to making decisions for next year's planting season?
Well, our goal is to always help producers with their farm management decisions. And so sometimes we think about acreage, sometimes we think about commodity prices, but we're not giving advice in that space. We're sort of challenging individuals to upgrade their thinking a little bit. And so the first thing we've been encouraging people to do is to really look at their budgets and look at their costs of production. And what we've seen is a lot of attention on fertilizer prices, but a lot of overlooking of the soybean corn price ratio. And that's gone from, career highs or very near career highs back in the spring to back to 2012 levels, like 2.2, 2.2 and a half right recently. And that's going to have a big implication. So encouraging producers kind of tune out some of that expectation of what farmers should be doing and do what their budgets say. And I think a conversation I had in South Dakota a few weeks ago summarized it pretty well. The producer said, I think we're going to plant a lot of soybeans in the country in 2022. And I said, what are you going to do on your farm? He goes, well, I'm going to plant the same amount of corn as I always do. And I said, so how does that reconcile? He goes, yeah, I guess I might be listening to too much external noise. I bet everybody does kind of what I'm doing. Is everyone thinks their neighbors are going to do one thing and they're doing something different. But one of the things we have with the Ag Forecast Network, which is very unique to agriculture. I don't think anybody else out there has this. It's a network that challenges you to think critically about uncertainties. And so one of the questions is, what's the probability of the U.S. planting more than 93 million acres per the USDA's March prospective planting. And it's a way for us to think about expectations and confidence around those points. And so I'll share my forecast. I think right now there's about a 65% chance that that number is going to come in above 93 million acres. The consensus is about 40%. So all the other people in the network think it's 40%. Um, as you can expect, there are some really high forecasts and some really low forecasts. But the idea here is let's let our expectations change and shift as we get new information. And one of the key pieces of new information I'm waiting for and watching very closely for is the winter wheat and canola planting or seeding report that comes out in early January. I think winter wheat acreage is going to be a huge part of this acreage debate. I also think cotton is going to be important to keep an eye on. Cotton has been pretty strong. It's going to be competitive, especially against soybeans in the Delta region. And I think the whole idea is I'm not making an acreage estimate, but I want producers to think about where their expectations are and how they stack up against others, benchmark themselves versus others, and how they change their expectations in light of new information. And this kind of brings to one last point I think that's relevant for 2022 is it seems like the range of possible outcomes are wider than maybe ever before, and so or wider than most times in our career. So let's think about the corn acreage story. What do you think acreage will be in 2022? Now think about the highest number and the lowest number that you think is possible for the USDA to project in that March prospective planning report. And if you're like me, that range is probably too narrow. We probably need to spread that out. And that's true for the acreage. It's true for interest rate expectations. It's true for gasoline consumption, gasoline prices. I think the range of possible outcomes in 2022 is wider than most of us want to think. And that needs to impact how we make decisions on our working capital or our risk management tools. And it just seems like 2022 is a year that has a wide range of possibilities.
I would agree with that. It just feels like that the possibilities are endless, so to speak, as we move into next year, despite so many factors out there. But I think there's a lot of things to look forward to as well. I know, of course, farmers get caught up in watching what's going on in South America, and that's another thing that impacts our market trade, of course. Anything you're hearing from South America right now, outside of maybe some dryness issues I'm hearing about in Brazil and Argentina, David?
Well, that's the time of the year, right? When we have a lot of conversations about dryness in Argentina and South. It's kind of like they're June and July here in the Corn Belt. It's sort of that time of the year where they're waiting on that next timely rain, and we'll see how that plays out. But no, the market has really shifted to this South American growing season. That's going to be a really important narrative to see how it plays out. And I think it's really important for U.S. producers to realize we're closing the gap on that China window for purchasing U.S. soybeans. I'm calling off the top of my head, but I believe China purchases 50% of their soybeans in the last quarter of the calendar year and about 25% in January and February. And then it's just pretty lackluster activity throughout the rest of the year. Now, if South America has a production problem, we would expect China to continue to buy soybeans into the spring. So that's sort of a good indicator of how much challenge South America has. But right now, it's too early, I believe. And so I think the big South American question mark that will have the biggest impact going into the planting season is where does this darn soybean corn price ratio set up as we get in that crop insurance pricing window? And so we have a Ag Forecast Network question about that, but it's hanging around 2.2. And the last time we got to a fertilizer price ratio of 2.2 was in 2012. We also had $160 an acre fertilizer. It was a really high fertilizer price year. And guess how many acres of corn we planted that year? 97 million acres of corn that year. I'm not making a prediction of 97 million, but it gets to this point we talked about earlier. I think you can make this is how wide the range of possibilities are. Is there's just so much we're pushing to the extremes on all of these things, and so that can give us extreme outcomes as well.
I'd also love to get your thoughts on the demand side. You alluded to it a little bit, but you always have great thoughts on the demand picture for the U.S. and looking at China specifically, and some of those other key markets. We know that it feels like shipments and whatnot are a little lackluster for grains here from the U.S., especially on the soybean side. But anything with demand that you're seeing, good or bad, moving into 2022, we need to keep an eye on.
Well, I think in general, we're in a good demand story. I think this has been a huge part of the recovery. There's even sort of this excitement in the air that maybe that we're on the cusp of another demand boom or another demand surge for U.S. agriculture. And of course, the last one we saw was corn going to biofuel and soybeans going to China. And what's interesting about where we are today is that narrative is flipped a little bit. It's soybeans are going to fuel and it's corn is going to China. And so you mentioned soybean exports to China for the calendar year and even for the last quarter haven't been record breaking by any stretch of the imagination. They've been above the trade war activity, but they're not breaking records. It's the corn story that's breaking records, and soybean oil has stumbled a little bit in the last few weeks. But soybean oil was a huge part of the narrative, in the summer and into the early fall, and I think it will continue to be a big part of that story heading into 2022. In fact, I saw some chatter and people talking about, oh, are we going to have enough acres to meet all the soybean demand that's coming online? And that's usually the sign that we have a lot of enthusiasm in agriculture and a lot of enthusiasm about markets and demand. So that's a really positive story. I think the other piece to keep in mind is where are we going to go with this phase one trade agreement? It's set to expire at the end of this month. And, any moment now we can expect a comment or an idea or a hint from the administration as to what they're going to do after that phase one trade agreement expires. China is going to probably buy a record $35 billion of US ag products here in 2021. That's up from the record of 29 billion. We almost got to that record last year, but it's about a 25% increase from our previous highs. They made a lot of purchases this year. It's not going to be enough to reach that goal for the phase one trading agreement. The one of dozens of goals that they had in that phase one trade agreement. So it's not clear how we're going to negotiate that or navigate that. I don't think either side wants to put tariffs on. Tariffs are a tax by another name, and that would be inflationary in prices, which would be, a challenge for both economies in light of the current macroeconomic situation we face. So it's unclear where we're going, but I think there is some positives in the demand story, and we just got to see how this plays out in the next year or so. Will China continue to buy a lot of corn, and will soybean crush facilities continue to be announced and continue to be built in response to high soybean oil prices?
A lot of things to keep our eye on, and of course, plenty to discuss. But before we run out of time, David, I know again with the Forecast Network and everything you guys have online, a lot of great tools to help producers make some decisions on their own. How can folks learn more about all the tools you guys have available?
Yeah, check out our website, aei.ag. There's several free offerings, including the new podcast season, Corn Saves America. Look at the uncertainty around ethanol, or excuse me, the uncertainty around carbon markets, and we use the lens of ethanol to help tell that story. We also have the AEI Premium subscription service for farm managers who are looking for a little bit of an edge and a little upgrade in their thinking here for 2022.
Well, David, thanks so much for joining us. And again, I wish you and yours a Merry Christmas and a Happy New Year. And I know we will talk again real soon, sir. Thank you so much for the time.
Thank you, Jesse.
David Widmar with Agricultural Economic Insights, AEI.ag is where you can find them online. That's going to do it for Market Talk. From all of us here, we wish you and yours a Merry Christmas and a Happy Holiday. I'm your host, Jesse Allen. We will talk to you next week after Christmas.